Claims in Contestability Explained Insurance Exam Prep. Question 1. What is the purpose of the incontestability clause? It prevents the insured from suing the insurer. It prevents the insurer from denying a claim due to material misrepresentations after the policy has been in force for a specific period, usually 2 years. It allows the insurer to contest claims forever. It forces the insurer to pay all claims instantly. After 2 years, the policy is incontestable. The insurer cannot void the policy for lies on the application, except for outright fraud in some health policies. Question 2. If an insured dies during the incontestability period and the insurer discovers a material misrepresentation, what happens? The insurer must pay the claim anyway. The insurer can contest the claim, void the policy, and refund the premiums. The beneficiary goes to jail. The face amount is cut in half. During the first 2 years, the contestable period, the insurer has the right to investigate and void the policy for material fraud/misrepresentation. Question 3. What happens if an insured misstates their age on a life insurance application, and it is discovered at death? The policy is voided due to fraud. The death benefit is adjusted to what the premium paid would have purchased at the correct age. The insurer keeps the premiums and pays nothing. The incontestability clause forces the insurer to pay the full amount. The misstatement of age provision allows for an adjustment of benefits, and it is an exception to the incontestability clause. It is always contestable. Question 4. In health insurance, the equivalent of the incontestability clause is called the grace period, time limit on certain defenses, proof of loss, notice of claim. The time limit on certain defenses provision prevents the insurer from denying claims for pre-existing conditions or misstatements after 2 years. Question 5. What is the standard timeframe for the notice of claim provision in health insurance? 10 days, 20 days, 45 days, 90 days. The insured must notify the insurer of a claim within 20 days of the loss, or as soon as reasonably possible. Question 6. Upon receiving a notice of claim, what must the insurer provide to the insured within 15 days? The final payout check, claim forms, a denial letter, an investigative report. The insurer is required to send the necessary claim forms within 15 days of being notified of a claim. Question 7. If the insurer fails to send claim forms within 15 days, what can the insured do? Sue the insurer immediately. Submit the claim on any piece of paper detailing the loss. Forfeit their right to the claim. Wait indefinitely. If forms are not provided, the insured can submit written proof of the occurrence and extent of the loss in their own format. Question 8. What is the time frame for an insured to submit proof of loss? Within 10 days of the loss. Within 90 days of the loss. Within 1 year of the loss. There is no time limit. Standard provisions require that written proof of loss must be provided to the insurer within 90 days. Question 9. Under the time of payment of claims provision, when must claims be paid after receiving proof of loss? Immediately. Within 30 days. Within 60 days. Within 6 months. Claims for specific losses must be paid immediately upon receipt of written proof of loss. Question 10. How are disability income claims typically paid out? Lump sum, periodic payments, not less frequently than monthly, annually, only when the disability ends. Disability benefits replace lost income and must be paid at least monthly. Question 11. What does the payment of claims provision specify? How much the premium is? Who receives the claim benefits, example, the insured, a provider, or the beneficiary? The exact dollar amount of the check. The penalty for late payment. This provision details to whom the benefits will be paid, such as directly to a hospital if there is an assignment of benefits. Question 12. Can an insurer require an insured to undergo a physical exam while a claim is pending? No, never. Yes, at the insurer's expense, as often as reasonably required. Yes, but the insured must pay for it only if the claim exceeds $10,000. The physical exam and autopsy provision allows the insurer to examine the insured to verify the claim, at their own expense. Question 13. If a life insurance claim is denied, who holds the burden of proof to show the death is not covered, example a suicide within the first 2 years? The beneficiary, the state, the insurance company, the agent. The insurer must prove that an exclusion applies in order to legally deny a claim. Question 14. What is subrogation in the claims process? Canceling a policy. The insurer's right to seek recovery from a negligent third party who caused the loss. Paying the claim twice. Suing the insured. Once the insurer pays the claim, they take over the insured's right to sue the at-fault party to recover the costs. Question 15. What happens under the legal actions provision? The insured must sue within 30 days. The insured must wait 60 days after submitting proof of loss before filing a lawsuit, and must sue within 3 years. The insurer can sue the insured at any time. Legal action is strictly prohibited. This protects the insurer by giving them 60 days to investigate, and puts a 3-year statute of limitations on lawsuits. Question 16. What is a facility of payment clause? Allows the insurer to pay premiums. Allows the insurer to pay a portion of the death benefit to a relative or someone who incurred funeral expenses, if the beneficiary is missing. Allows the insured to borrow against the policy. A grace period extension. This expedites small payouts to those who handled final expenses when the named beneficiary is incapacitated, a minor, or deceased. Question 17. If a primary beneficiary dies before the insured, and no contingent beneficiary is named, who gets the claim payout? The state, the agent, the insured's estate, the insurance company. If no living beneficiary is named, the proceeds default to the insured's estate and go through probate. Question 18. What does the Common Disaster Clause address? When multiple people die in different accidents. When the insured and primary beneficiary die in the same accident, dictating that the insured is presumed to have outlived the beneficiary. Natural disasters like hurricanes. Suicide pacts. This clause ensures the death benefit goes to the contingent beneficiary rather than the primary beneficiary's estate if they die simultaneously. Question 19. Can an insured assign their health insurance benefits to a hospital? No, benefits must go to the insured. Yes, through an assignment of benefits, allowing the insurer to pay the provider directly. Only for life insurance. Only if the government approves. Assignments are common in health insurance, so providers are paid directly by the insurer. Question 20. If a claim form is submitted with fraudulent information, what constitutes the crime? Only if the insurer pays the claim. The act of submitting the false claim itself is insurance fraud. Only if the amount is over $1,000. It is not a crime, just a mistake. Insurance fraud occurs the moment a false claim is submitted with the intent to deceive, regardless of whether it is paid.